What's going on, guys? Welcome on into today's stream. We are live here Sunday, July 31st, before we open up the first day of trading for August. See how the month of August treats us. We'll talk about at some point how the market tends to behave in August. I think we're coming into a seasonally weaker period. We actually just came out of a seasonally stronger period, if I'm not mistaken. And then as we get into September, we tend to see, at least based on history, and if you even go back the past couple of years, we do tend to see some weakness. If you actually look back at last September, you zoom things out. This is now a bigger picture talking, but we're talking, look at last September. From August 31st, well, actually, I guess September 3rd, we kind of peaked out right here, had a nice pullback, which then sent us up to those new highs, and then, before we set up for this year's substantial pullback correction, whatever you want to call it, bear market, whatever you want to call it, because we hit all those classifications. Bigger picture, here's the S&P, here's SPY, the S&P 500 ETF, there's the trend line, and we're nowhere near that yet, although not that far off realistically. It's up towards that 200 period moving average, up at 430-ish. We'll see if we get anywhere closer to that this week. We have our doubts, though, behind that, and let's pull up the volume profile so we can kind of see all that good stuff. But we're going to see some strong, if you just zoom out on the volume profile too, we're looking back at the past, I don't know, a little over a year looks like I'm looking at right now. And we have the highest volume node up around this 433, which is actually right at that 200 period moving average, which would put you, if you were to go straight up, right at that trend line. Now, we're probably not going to go straight up. Anything can happen, but that's an interesting spot to say the least. But right now, we got to first, get through this area right here, up around from 415, I'd say up to about 417, realistically 420. I'm going to kind of use as like that psychological spot. A lot of people are probably watching that level too for other reasons, but that said, 420 is kind of like we break through 420 and we hold above that. I mean, we're probably off, looks like at least based on what we're seeing, that's a pretty good sign, right? We're getting above this area right here, bear market rally, I guess you could say. Certainly, obviously in the cards for sure, 100%. But, as you start to break back up over areas that were prior areas of resistance, it shows a lot more strength than you would think in just a traditional, if we're going to continue to go down to new lows. We totally can, but that would be in kind of an incredible move down to new lows if it were to happen in a shorter time frame based on, like, let's say we break back over these highs. Okay, we're showing some strength. Yeah, you can pull back. Yeah, you can go back down and come down to like 390, even this 379 area I really want, but maybe we don't get that. Even $400, will be some nice healthy pullbacks. But if we start, if we push up to here, a pullback from 430 down to new lows, let's do the math on with that percent. That's a pretty big percentage. That would be at least about a 15% drop from there. So that'd be pretty big, but we'll see what happens. The market can do whatever it wants to do. And also, you got a lot of people trying to, guess both sides. And we've been talking about that the past couple of weeks. Now that we've gotten into August, I think we have a cleaner trade setting up. And I think the clean trade this week is probably going to be downside. But then again, anything could happen. I think after you squeeze out a lot of shorts, people who kind of got a little overexcited, tried to go heavy last week on the short side, all got kind of pushed out. Maybe they jump back long on Friday. Maybe they're going to jump back long on Monday. And I think in the short term, we're pretty overextended. You can't deny that. We're pretty overextended. So we're up into key area of resistance. And, we're going to see we've been pretty much straight up the past 3-ish days, from hitting down to 390 on Tuesday, back on the 26th, right? That was a Tuesday. Yeah, it was Tuesday. Tuesday the 26th, we're down here towards 390. And then we finished the week on Friday at 412. Can't make it up. What's going on, guys? Everyone's doing well. I am absolutely shot. Literally just woke up from a nap. Went like scuba diving in a lake here in Texas this weekend because I'm going to be going bigger scale out in August. I'm absolutely shot. Ton of driving. Was pretty far away, but finally took a nap and kind of recharging. But I'll probably sleep a lot better tonight. So we'll see. But hope everyone's doing well. Let's see. If we reject off here, I'm thinking we could be. Let's see. I mean, right now, if you look at the overall futures right now, they're red. Nothing too crazy, but it is substantially more red than, let's say, we'd like to look at when it comes on. We come on a stream, we're looking at futures, and they're down. I know we see plus or minus 0.25 or less percent. Who cares? I guess it's a little bit more substantial. Nothing that can't be, bought right back up at the open, or bought back up, into pre-market tomorrow. Nothing that, is too crazy. There's no really substantial news that's, I would say, necessarily driving this exact number down, right? So anything could happen by tomorrow, but I think we're at a technical spot that should be resistance. So this week should be really interesting. Don't be surprised, though, if we have some games. So don't be surprised if we get some continued strength and then maybe we push up into here, then a pullback. Maybe that's the case. But what I'm more so curious about to see how this plays out is going to be on the pullback, because it's going to happen at some point, whether we go further, whether we pull back from here, whatever happens. How does it take it, and how far we pull back, and how strong do we see certain sectors, right? Do we start to see sectors holding up with relative strength? Do we see, let's say it's the big dogs, the Apple, Amazons, Googles, Teslas, Microsofts, are those the ones that lead us back down? Do those stocks have more relative strength? Like, who is going to be leading us and who's going to be the lagging sector and stocks realistically in this pullback that we get? That will be, I think, pretty telling. So coming out of the biggest week of large cap earnings, there are still a lot of earnings to go this coming week and even going forward. But I believe that right now you're going to start seeing a lot more momentum, or at least volume, shifting over potentially to small caps as we are now out of some of the most volatile large cap earnings. There could be still tons of volatile stocks, obviously, but I think you're going to start to see a little bit more focus there, especially if we pull back, but we see strength in IWM relative to the S&P, the Russell, and we see strength in, spec names, growth names, tech names. We'll see. It doesn't mean that those have to be up this week if the market's down. It just means that, hey, they're not down as much as, let's say, the S&P or the NASDAQ or the Dow, right, for example. That's all we're kind of looking for when it comes to relative strength. By the way, we got my alert went off for DXY. This is not looking too good in terms of being bullish on the dollar right now. I mean, you could totally come down to like 105 and then bounce, but what we should look at and what could be a good idea, if you look at this, essentially a parabolic move on DXY, right? You have this massive run. When these parabolic moves start to break down, you could see some substantial downside in the coming weeks and months. I wouldn't say in like one day. It's not a day trade by any means, but I'm thinking that this breaks. What you'd want to look for now is you'd want to see it holding below 106. You can give it up to like 106.50, but I don't want to see it really getting back above 106.50 or so. But now that could be a really good risk reward trade. So essentially making sure it stays back below this trend line that we had since essentially late May, early June. They had those three touches right there. We broke down below. So now let's see what happens here. But this could be a play to look to short the dollar against this trend line from a more technical trade perspective. You can look at it from a more fundamental perspective. People are shorting the dollar. I've been seeing people talking about, I'm shorting the dollar, this, and this. Fine. But this is something that I would say would try to go with more just shares, would maybe make it a decent position, and it doesn't have to be a small position, and look for, a decent risk reward trade. So, here you can look at something like, if you're going short, right, let's say you go short right now, your stop loss is going to be up to here. So you want to be looking to target at least double what you're going to risk. So down to like, what is this going to be? For a 2X on that, you'd be looking to target down here towards like 103, 104 and risk up to about 106.60. So that's kind of the target. You can go for more or whatever. But I mean, first key spot can be that 50 SMA at 105. And then we'll see from there. But that's kind of an idea. Just to have an idea, in mind of the potential play outside of playing the traditional stocks that we talk about, right? Because you don't have to play just stocks. You can play the dollar. You can play bonds. You can play anything. There's a ton of things. You can play VIX, right? There's so many ways you can make money in this market. You don't have to necessarily play. If you don't feel really confident about a specific individual stock or a sector or whatever, but you have a really high conviction on, let's say, the 10-year dropping down and bonds breaking down below this key support area, well, maybe go play bonds, maybe go long TLT if you like bonds right now, right? Maybe, that's at least what I'm doing. Not like, not necessarily a recommendation of doing that stuff. I don't people following me because I want you to do your own stuff. But at the end of the day, like make your own mistakes, have your own success, because at the end of the day, that's what's going to make you better. I mean, I 100%, if I had, let's just say, followed somebody the past 6 months and lost money, like, yeah, that would suck. But like, you don't learn anything from that. If you follow yourself the past 6 months and lose money, guess what? you're not going to make those mistakes next time we see this cycle play out, right? You're going to have all the stuff back banked up in your memory. Obviously, you're going to make mistakes here and there, but you're not going to make the same size of mistakes. You're going to have all that experience to learn from and to adapt from and to make better decisions from at the end of the day. We can look at futures. This is this is on TradingView. TradingView, there should be a link in the pinned comment or description box down below if you want to check it out for free. You don't have to pay for it if you don't want to. I pay for the full version, but that's me. So yeah, breaking down back off of where we finished up last week. We pretty much finished up last week. This is more just of a charting view of where we actually are across the S&P futures. Okay, so essentially, this is the S&P 500 right now, trading live, moving. Okay, well, we can see futures. I think it might be delayed by a few minutes, but whatever. For the same purpose, right? You see how we're kind of down from, let's see the percentage-wise, right? We're down about 0.37%. So yeah, we pretty much closed the after hours on Friday here, and now we're sitting down here, okay? So we pretty much broke down, nothing crazy, but broke down into this area that we kind of consolidated before the final move on Friday. So we're holding right down here on the on futures right now. So we're holding down to, looks like around 41.15 or so. 41.15 is the kind of level that we're looking at on the S&P. Oil, let's jump over to oil. Oil is, as we speak, it's down about 0.5%, 97.75. Nothing crazy here. I mean, you go back to Friday, you pushed up to 101, almost 102. But if you zoom out in the bigger picture for oil, what does that mean? What is 101, 102, guys? That's right here. You couldn't get up into this higher volume node. You're just essentially, lower highs, right? Lower highs. It's just that's the game. So do I really want to be long oil or oil stocks right now? Not necessarily. Sorry, I didn't mean to jump back. Not necessarily. I mean, until the oil starts to show some strength, I don't really, have a reason to be long. I mean, until this thing starts to break out or at least start to show, hey, it's no longer building these lower highs, right? You can have your thesis. You can decide whatever you want. You have these high. I guess you have these lower or these higher lows too. So you could be setting up at some point for the next bigger move on oil once this kind of consolidation kind of at least either breaks up or breaks down, right? But in terms of support on oil, we're looking at down here, really good spot, in terms of a bounce, we'll be down towards the lower 80s. Down here is going to be a really interesting spot. It was the highs back in November of 21. We eventually broke through that and went higher. But yeah, it doesn't look too strong. You can't deny that it broke the trend line down and been just, lower highs, the past couple of weeks. So for now, that's the deal. Also, Exxon Mobil, despite this, Exxon Mobil has been pretty strong. So maybe a look over here, right, is XOM. If oil does bounce from here and starts to hold up, this could be what helps send this thing and fills this gap on Exxon Mobil up to about $100. Once that gap fills, I think you want to be very, very cautious here just because of oil. So this is going to be an interesting setup this week and into next week. I'm not sure I'm really too interested in playing it because I haven't really been a huge fan of Exxon Mobil, up or down really. I'm not really going to try to guess. But if we look at this, let's see if I can draw this zone right here. This is kind of a zone that I'm watching. This is going to be an area of support. If that breaks down, not a good look. And then, of course, your gap fill right here. Let's draw that in. There's your gap fill to the upside up to about $100 a share. So we're kind of in between. So until one of those areas fills, better risk reward long down here at like 93. Better risk reward short here up at like $99 to $100, risking $100. If it closes above, get out. That's just kind of the deal. So let's see. CODX. You've been seeing, I think New York declared a state of emergency for the monkeypox stuff. I haven't been following that stuff, to be honest, too close. I have no idea how severe. From my understanding, it's not too severe compared to COVID, right? All that stuff. But doesn't mean that you can't see some action across some of these names like a CODX. Let's see. It's looking pretty decent, honestly, at least in terms of strength. So building higher lows here over this 570. If 570 can hold up, let's see. Let me get my drawing tool back. 570 is going to be your support. 50 estimate right below. I like that. You're at the 200 moving average right now on Friday. So let's see if we can break and hold above that. But then in terms of volume profile, if we just zoom this guy out, I think that there's decent range up to about $8. Once you get to $8, it's going to be a grind. I mean, this thing consolidated in this, $8 to like $11 range for months, almost a year, realistically here on CODX. This is kind of your spot. I think that will be really, really crucial. Let the chart adjust back. There it is. So yeah, so getting up into $8 is going to be, I think, a decent target. After that, it's going to be some strong resistance, I'm assuming here, based on the chart, based on the volume, and based on the exchange we've seen at those levels. I would say Sounds like, yeah, no, this, I mean, I recently got certified for to scuba dive. It's been fun. I'm not like, anything crazy here in Texas. Like there's not like outside of going to certain spots, like pretty much lake diving. Is that fun? Like it depends on what you see is fun or what you want to see. Obviously you kind of want to go to somewhere cool, reefs and stuff, right? That would be more fun. That's what the plan is in August. Later in August, we have a trip planned for Hawaii. So that's going to be sick. But I wanted to get some more practice in because I recently got certified. So should be all good to go. Neo holding the $19-20 mark. Previous support resistance. Let's take a look. We haven't actually, honestly, I haven't looked at Neo in a couple days. At least from, honestly, I don't even know if I looked at it last week. So look at this. So we had this little trend breaking out here. This bottom trend line, I'm not a humongous fan of. It was pretty steep, and like it wasn't like we didn't have perfect touches. I mean, it was not terrible, but we didn't have perfect touches. So I was kind of skeptical of it actually holding right here, and it didn't necessarily hold. But Neo, believe it or not, has held up the past week. It pretty much was just a flat week, right? It just consolidated in this range from like 1860 up to about 1975. Like that's all it did. But for right now, here's Neo. My view is this. I'm looking at this trend line right here. Trend line to the north. Boom. I mean, that is your key. You got to break, which we're right at. You break up over $20. That's a good look on Neo. So let's see if we can break that $20. I would say you'd want to, obviously, the risk reward here is not bad. Honestly, I'm gonna write this one down just to look at it. If the market's not super red, we'll see how the strength looks tomorrow. But I mean, a risk reward on like go out a couple weeks on an option trade, nothing crazy. But like, hey, if Neo comes back down here, you get out right down below this 1860. But you're playing it for a breakout here. This thing breaks 20. It can go to 21 very, very fast. It's not even a big move, right? 24 is going to be your key spot. That's this high right here, also right up in here. Same area pretty much. So that's the look on Neo. I do like that for a breakup over $20. So let's just write that one down. Neo on the list. For me, I'm looking at Intel this week, ARC this week. Neo wouldn't be a terrible idea. Intel and ARC for the covered call portfolio is longer term, bigger picture plays. So I'm looking at those this week, and I'm going to be probably selling puts across both. I'm thinking on ARC and on Intel. That will be the plan. So we'll see if we can grab some. Neo could be just more of like a short-term breakout trade, and once it kind of pops up $21, $22, wash the hands, move on. Obviously, could it go for more? But for me, it'd be like, look at this just short-term move. I don't want to necessarily put too much size or too much time behind the China. I don't know what's going to happen in China. I have no idea. Maybe that's the time to buy. Maybe it's not. Nothing against Neo. I do think they're probably going to be solid long-term, but they probably still have to grow into some valuation numbers. They also have some sketches that I saw. I think we saw the short report a couple weeks back. There was a short report out on Neo. I forget who it was from. I'm not sure the credibility, but they had some concerns. And one of the biggest things is with that they were claiming that Neo was essentially reporting lifetime battery subscription kind of revenue all at one shot. So how they do their thing with their cars is that you kind of buy these like battery subscriptions. So it's like you go in, do a battery swap, go pull up to the station, they swap your battery and you're all good to go. You got a new battery and you're all set. So they would essentially say, hey, over the lifetime of a car, we estimate, or here's the numbers of, here's how much that we are going to make in revenue from that subscription model. They essentially, the short report was claiming that they were taking that entire number over a 7-year span and putting it all into one and counting it as initial revenue, which was inflating some of their numbers. So that's kind of a concern. I don't know how legitimate that really is. But Neo, man, if you get back over 25, you got some room. I mean, this thing starts to get interesting. 27 is a good target. And then beyond that, we can be talking 30 plus. But we got a long way to get there. It seems like it's been pretty slow. So it hasn't really been too volatile, to be honest, as of late, which is not a bad thing, I guess. Okay. Exxon puts. I think Exxon puts could be good up towards $100. I wouldn't even be super concerned about Exxon, even if it got over $100. If you're just watching oil, they had a pretty knockout earnings from what I saw last week, which is great. Does that necessarily mean a ton for the future? I don't know how much that really means for the future and how that shakes out. But I would be more so like, hey, if it gets over $100, okay, cool. But I think the real risk reward in this trade is a lower high versus this 105 that we hit. If you can't break that, I think that's an amazing short setup. So you could wait for confirmation there, or you can look to start to front run and say, hey, I'm going to start adding into a short right here, and then I'll look to add into a short up here. And if we get those opportunities to add, I'm going to cut my short off if we break a new high. We're getting pretty close. Risk reward wise isn't terrible. You can play it shares or you can play it with options, but give it time. Give it time, please. Or in the monies are even better. Ideally, if you can. One way you can play some of these option plays, which could be a strategy to utilize, I haven't really utilized it, but could be a good idea going forward, is go at 2 strikes. If you're going to play options on a play, go at 2 strikes. It's going to cost you a little more money because you're going to play in the monies, but play it in the money. So let's say you wanted to short Exxon Mobil as an example, right? Or even you go long NEO, whatever stock, doesn't matter. I want to short Exxon Mobil. Okay, so I'm initially going to buy, a contract here at like the 195 for a 195 put out to, let's just say, November. I don't know. Okay, that one is an out of the money contract because let's say we're up here towards $100 or let's say we're at 99. Okay, so that's an out of the money. That's $4 out of the money, right? If we start pulling back, that should move pretty nice and could go into the money and could be a killer if it comes back down, sub 95 down to the low 90s or even lower, right? Could be killer by November. What you can also do here is go with an in the money. So let's say I'm going to buy this. We're at 99. I'm going to go buy a 110 put. That means that delta is going to be a lot higher. You're going to be a lot safer. That in the money is going to hold a lot more value. It's going to be more expensive, but it's going to hold some more value. So then that will trade a lot closer to 1-to-1 with the stock than the other out of the money option. I think that that's a much better way to play options long term on large caps, because large caps are actually a lot of fun to play with based off of support resistance. They're really fun. Like you can play these gap fills, these support levels, these volume nodes, these are really cool. Like they're a lot of fun to play. The problem everyone has that maybe you can predict the move, but then when you're playing options, right, you're getting killed on time decay, theta decay. All these things are slashing you left and right. It just takes too long. The delta is not high enough. We have a ton of implied volatility. You get screwed like 6 different ways, right? So when you're playing in the money, you're eliminating a little bit. You still have a lot of those factors, but you're eliminating a lot of that stuff too. With that option generally going, it's not going to go to 0 most likely unless you kind of end up getting screwed and it blows up in your face, which could happen. But on a 110 Exxon Mobil put, that's up here. My stop would be here anyway. My stop loss is at 105. So, not a bad idea. Now, I'm probably not going to be like super like crazy for that, but I will put an alert on this thing just so we have it set up in case of interest. I'm going to go 99. I'm going to go crossing up over 99. And then I want to get a crossing over 100 because that would be essentially breaking that gap and filling through there. So let's do this. Let's do 100 on this one, crossing over 100, crossing up over 100. Boom. So those are in just in case, just so that I can have them for this week or next week or whatever the heck happens. How can I play TLT options? So TLT, the way I'm playing TLT is I'm out to October, I'm not playing this one super short, but I have some TLT 125s. They're, pretty risky because they're pretty far out of the money. All I'm really looking for on TLT, you're seeing it right now. TLT, just these 4 days in a row, right? Could not break up over 119, 120. You break that, I think you're going to get a pretty explosive move of a couple dollars. And so I'm looking to sell into that move. Doesn't mean that I think TLT needs to go to 20, 26, 28, 30. I don't really care. Maybe it does, but I'm looking for it to make an explosive move over that. So I'm looking to add into that TLT position. If we come back down towards the 50 SMA, I want to get more. We'll see if we get that opportunity, but that's at least my plan. And they're October. So, I figured that that's a decent amount of time. I think this move could happen by September-ish. By the end of September. So I figured October's enough time to have on my side just to play it. I could go to end of the year if I really wanted to too. It's another option, but I just figured that October's a little cheaper, so I went with those instead. SoFi, here's the thing about SoFi. I was just seeing some stuff. We were talking about SoFi and the student loan situation and all that. That's going to be kind of a big player for them. I think we've been talking about that. That should be a good, more of a boost for the stock and for the morale almost for them, I think. So what they're doing now is Biden's apparently going to announce the next student loan extension or whatever they're going to do. Maybe it's not an extension. I don't know. He said by the end of August. Okay. The thing is that they have essentially alerted some of these providers to stop sending or don't send emails about your upcoming payments due. So what happened last time was once that was made aware, they ended up extending it. Seems like that's what's going to happen again. They may extend it until the end of the year to make it their final decision or whatever they're going to do, or they keep just pushing. I have no idea. So that is kind of the thought on that. I think that we have a chance again for by the end of August for them to come out and go, hey, we're extending it to the end of the year, or we're extending it to the end of November, past the election time, right? You know what I mean? It's all kind of a game, whatever, in that sense. But the chart doesn't look bad. What you want to look for here is if we do pull back, and this thing is not looking like super, super strong, but it's not super, super weak. If we do pull back, they got earnings, looks like, coming up. So be careful of that. Let's get the earnings out of the way. I would not touch this thing into earnings. Risky. But if earnings come out, they push student loans again, they pause that, they say, hey, we're going to pause at the end of the year, but by that time we're going to have a better plan on how to, course of action. That kind of gets more clarity for SoFi potentially. They have other stuff. They're not just a student loan refinance company by any means. They do a lot more, but it should be a big help. I would imagine they're going to get a lot of people refinancing with them, especially if the government decides to not do kind of a subsidized interest plan, which is possible. There's a bill, kind of floating around that is like a no interest on federal loans. That's, in my opinion, a really, really freaking good solution. I like that solution a lot. Pay it back, but no interest, because that's how everyone's getting screwed at the end of the day, right? You're paying off your loans for 30 years. Why? Because you're not paying enough to get to essentially counteract the interest that you're paying, right? So I think it's going to be interesting. If that is a potential possibility, then there would be a lot less of a need to refinance with SoFi, because if I'm getting 0% from the government, well, I don't care. I mean, my loan might be 7% from the government prior. I was going to refinance with SoFi to get it down to 4 or 5, which would be nice, but now I'm getting 0. Why am I going to go to you? So that's the thing. Also, another factor here too, not to kind of get, hopes up or even dial too deep into this, but here's the thought. You go off the government, you go off the federal loan plan, even if they start payments again, but they happen to pause them, let's say in a year. Let's say we go deeper into recession and unemployment starts skyrocketing, because we do know that, hey, like if the Fed keeps raising like this, there's a very high chance we could go that route, right? And what if they pause it again? So there's going to be people who are a little skeptical or who are a little bit scared to refinance maybe right away, knowing that maybe in the macroeconomic scale of things, like it's possible the government might pause those again if there is continued hardship or there is further hardship in a year or 6 months. I don't know. So you kind of have that fighting against it. I'm not a huge fan, but we get more clarity there, and they flush out one more time with earnings. It comes under $5. Maybe I get interested. That's kind of my thought. So for now, chart doesn't look terrible. It is kind of building higher lows. You can't deny that, but it's not that. It's one earnings report away from a new low. Just be careful there. It could be one earnings away from pushing back up to $10, because hey, they're showing some good strength. They're doing some good stuff despite the conditions on student loans. I don't know. That's just my thought on SoFi. Strong chance Alibaba do this from S&P. Chinese stocks are dangerous. Yeah, I haven't, to be honest. There's a lot of questions that are on those guys. So I just figure outside of trades, I'm sticking away from China stocks outside of taking in short-term stuff, short-term trades. TAN never moved after climate bill passed this week. Let's take a look at TAN. TAN. Solar play. Now this thing popped up a good bit. It's up from it was holding nice, building higher lows kind of here at 71, popped up to 85. It's a pretty big move. It's got more to go for sure for, more upside, but I think a much better play on this thing would be let it come down, fill this gap right here. Upper 70s is a better buy at this point in time. Let's see. Super Clear Lakes in Arizona. Nibaba red. Yeah. No, that's the biggest problem. Let me grab my phone real quick. Always forgetting this guy around. No, that's the biggest problem, is that the lakes and the clarity is horrible. That's why, like, when you go to somewhere like, I don't know, we're going to Hawaii. Like, when you go to Hawaii, the visibility is like 100 meters or, 100 feet, whatever it is. In a lake here, visibility is a couple feet in front of you. That's cool, but like, it's still nothing, not like amazing. It's like, okay, I can't really see where the heck I am. HDK, I'd be careful with HDK this week. Who knows what it wants to do? But we talked about it last week. Great sign for small caps. Great sign for small caps. Phase went nutty on Friday. Curious to see how it does tomorrow. Let's take a look. Phase, what do we got going on here? How did it shake out on Friday? Yeah, it popped up. It's up here. I mean, you got to get over this 13. Look at all these wicks. There's a couple wicks. Yeah, we had this push up here, what you kind of have almost on a, I guess you can zoom into a different chart. Let's look at a closer up chart. You kind of have, if we go and auto scale it, no, it actually pushed up in the after hours a lot, right? Looks like, if I'm not mistaken here. But you had almost you had these higher wicks right up in here, and you couldn't break up over that 1345, but you seemingly did in the after hours. So that's a good sign. At least going into this week, we'll see what it wants to do. Totally could make a run. These IPOs have been hot, right? Let's see. Tesla, you know what? I haven't looked at Tesla yet. Let's look at Tesla. Let's pull up Tesla. What is she at? 8. This thing, I think we mentioned someone had a put or a call on Tesla that they did very, very well on. They mentioned it on the stream on Friday. And I was like, to be honest with you, they're like, take profits now or hold to Monday. You can hold to Monday. It's not going to probably hurt you too much unless there's some bad news over the weekend. But after that move, I mean, dude, you got to move from 725 to like almost $900 in a very short period of time. So you crushed it. Realistically, you crushed it. So, I mean, take the gains, in my view, was what I was thinking. Take the gains and move on. 200 estimate right here. Very, very possible for a pullback. And then we'll see where it kind of holds up after a pullback for a possible. If you really felt like, I got to get back in Tesla to see what happens and potentially set back up for more if you want to play it. Grnq small cap. Let's look. Grnq. What's it got going on here? Post split, try to hold up a little bit on Friday, but yeah, this is going to be, you got to get more data, in my view. You need more data on this guy. Let's see what it does. What I want to see kind of is maybe it does this kind of game for a bit, and if it does that, now you have a risk level to play off of. Yeah, could you play off of Thursday's low? Sure, 129, 130, whatever it is, 128 was the low of the year. Sure, but you're not that far off. You can easily break below that and then bounce around. So I would say I'd want to see a little more data come out before potentially looking to play it, but float's tightened up. This could be one that has a nice run at some point very, very soon. I would not be surprised. So keep it on the radar. Probably time to move on from the SPAC plays getting too spread out. That's kind of how it tends to go, right? Money starts all flying in. And then once there's 30 different plays, there's some good short opportunities on those plays. Generally speaking. I mean, hey, the good thing is, I think that's going to be great. That's great for small caps. I mean, you're going to heat that something. There's momentum. There's momentum in the market again, based on some of those plays, based on what was it, HKD last week. That's a good look. So I'm happy to see that. I'm looking to see how small caps can hold up, and I think there's opportunities in small cap land, like we've been saying. This is going to be the next 6-12 months could be really, really nice. Realistically, the next like 6 to 8, going into prior to last year, a seasonally hot year. End of the year is seasonally pretty hot into January, February, March even. So that's kind of the time frame for small caps. And talking penny stocks, biotechs, low floats, like all the above essentially in that space. We'll see how the market shakes out too. Obviously that's reliant upon the S&P, not necessarily the S&P, but just in general the overall market health to be decent. Like if we did this and we're at 345, like before the end of the year, chances are like maybe we're not going to see too much craziness in small cap land, although that could set us up for a rally back in end of the year maybe. But I don't know. We'll see what happens. But I think if we do see some relative strength on the markets, and let's say the S&P holds up, does not make a new low, the lows are in, make a higher low from here down towards like 390. I don't know. Let's say something like that happens. That's going to be a good launching pad, I think, for some strength to stay or to hold up there. We talked about IWM. Look at IWM, the Russell 2000. From a technical perspective, it was just a beautiful setup. I mean, you had a prior high before 2020's pandemic, right here. at this area right around this like 170 this is the Russell 2000 ETF, okay? Covers small caps. You came down, pandemic lows, okay, cool, whatever. You have this massive consolidation up here, fake out move, pushed up, looked like we're going to break out. Here we go, and then boom, crush to the downside. That happened mid-November. Mid-November was the time that we saw this all kind of unravel. Mid-November was the fake out. And then boom, just downtrending since, came back, filled this gap, which we had right back in here on the 2020 run-up, end of the year there. Came down, found that area, prior high, gap fill to be support, and have bounced. Now we broke a trend line, and we're pushing up the upside. I mean, you couldn't have asked for a more big picture, right? From someone who's just looking at the charts like big picture, let's say a swing trader, on just shares, not trying to play options and get cute. I mean, you could have played this thing, multiple ways. Once we saw this thing start to break down, you could have been saying, hey, I'm targeting this. As long as this trend line does not break, I'm targeting this gap fill, and you would have gotten it. So really, really nice setup there. We'll see if that continues and how those lows hold up. Again, we're looking for relative strength. Where is it going to be this week if we do see pullbacks? That's what we're looking for. Here's a look at futures again. They are red, nothing crazy. VIX is up. We'll look at the VIX here in 1 second. They are red though, just a little bit, nothing too bad, but they are red to start the week off. Here's the VIX. Here's our VIX chart. Again, we drew this line in like weeks ago, and I was like, hey, I want the VIX to come down and touch this line. You got it. And so if tomorrow's a red day, good chance we're going to get a small bounce. The question is now going to be, is that going to be a follow-through bounce or what happens? From a technical perspective, it's a really good bounce spot for the VIX. We could easily see, though, if a higher low is built on the S&P in the coming days and weeks, we bounce here and then flush right back through. And then that look right here, in my opinion, is going to be more telling than whatever you're looking at across the S&P. Anything could happen. There could be fake outs for sure. But if the VIX starts to sustain and break down below 21, this thing could flutter out for, have its spikes along the way, but could flutter out for, a long time. And that would be a really good sign. So if we hold this trend line and we're bouncing back up and we spike back up and, or whatever, until this trend line really cracks, it's not like it's the only tool to look at, but it's a very helpful tool to start looking at and saying, okay, if I want to buy a dip right now, and I think that the bottom is in, if I think that's the case, do I have other points of data to back me up, right? Let's look at the 10-year, right? Let's look at oil. Those are going to be key things. We're looking at how the 10-year sets up for growth and tech stocks. The 10-year has essentially it's not perfect inverse, but essentially the 10-year has gone up and the market's gone down the past 6 to 8 months, right? Generally speaking, you're looking at all these factors. The VIX just broke a pretty key trend line that was holding for, over still like 8 months, right? It's been back since November, right? 8+ months now. The VIX has held this trend line. That broke down. Now, big picture, hey, if volatility starts coming out, and yeah, we can see ups and downs across the market day to day, week to week, but big picture, these lows very well might be in. That's kind of a great way to build that thesis. It's not one thing, but it's building a couple of things. Okay, I jump back to the S&P, right? What is the S&P doing? Let's see the S&P pulls back this week or next week or this month, whatever. And, pulls back. Where are we? Do we come back to 400 and bounce and build higher lows from there? Do we come back to 390, higher lows from there, right? Like, see how the strength is, or see how the charts are setting up to build that thesis to back your way into, okay, do I want to go long or short here? What do I want to do? That's the idea. So, that said, let's see. HKD was nuts. Take profit on Tesla. I agree. I definitely agree. I do feel like someone knew HKD was going to do, though. I wouldn't be surprised. It has been a long, that was like a 4,000%er from like the bottom to the top, essentially. I mean, that there was some big money. Someone had a chunk of change in there and crushed that. Load up on Redfin, Zillow, other here's the thing with all the real estate plays. What's funny? I think we looked at Redfin recently. What is it? Red. Why do I feel like I remember the ticker symbol, but I forget it. Redfin is RDFN. Okay, cool. Look at this chart. Not sitting here saying like, oh, this is amazing. They got earnings coming up, so be careful. Not like, oh, this must be a great play to the upside. This has a bottomed out chart look. But if we keep seeing the 10-year, the 30-year yields come down like they've been, These are not terrible plays to have on your radar. They really aren't, you know? So, well, I think a lot of people are like, oh, real estate sucks, it's screwed. I think that if as long as if yields are coming down, yeah, look at this stuff, because this is not like, well, no one's thinking it's going to be a good play. This could have some little bounces in between. You know, maybe bigger picture, those are the bounces that you want to short, maybe, but I would keep it on your radar. I would for sure. We talked about UVX, well, VIX and all that good stuff. With that said, I do have to wrap things up because I got to run in a few minutes, but we are looking at futures sitting here a little bit red. Nothing crazy, a little bit red, giving back some of the gains from Friday. One last thing is this week, we're going to do lives Monday, Wednesday, Friday, back to kind of the usual schedule. And I've had some requests, people talking about, hey, do more like active kind of trade lives. Obviously, we do lives for Power Hour. Like if I make trades, like if I do something, like obviously we do it live, right? Which is what we did we did a bunch of that on Friday. But maybe we do some random pop-up lives, kind of, hey, if I see something I'm going to do, if I'm going to sell some puts on ARC, I'm going to sell some puts on this stock, sell some covered calls here, we can do some more of that or make some individual videos. It's fun to do, talk through. I've got some people requesting some of that stuff. And so I figured, yeah, why not? It's a good idea. That said, I do want to wrap things up. I know it's a little bit shorter, 40 minutes so far, but it is what it is. We'll have a live tomorrow like usual, then Wednesday, and then Friday. That is the plan. Make sure you're subscribed here if you guys want to see more of these. Thumbs up, notification bell. If you're interested for more of those lives, it's up to you. I don't really, at the end of the day, I'm not going to sit here and tell you that you got to hit the bell and do all these things. It's up to you. If you want to have fun, we enjoy it. We have a lot of fun here. Hopefully the comments, the chats are really useful. That's why I like the lives. We can kind of toss a lot of ideas off each other. That said, thanks so much, guys. Have a great rest of your Sunday, and I will see you tomorrow on the stream for Power Hour. Peace.